We've had an election campaign where tax has been talked about a lot, but not in any great detail. Threats, but no promises. What we are told is that the Labour Party have no intention of raising any of the main taxes, so income tax, national insurance, corporation tax. And we're promised stability on corporation tax. So we're promised the rate will stay the same but kept under review. So hopefully we're looking at a reasonably stable period, but there are some areas of uncertainty. I think the areas of uncertainty are the wealth taxes. So inheritance tax, we're suggested that there will be changes to inheritance tax. The business, property and agricultural relief likely to be restricted. There may be a restriction on the capital gains tax base cost uplift on death. Those are probably the main areas in inheritance tax. Capital gains tax, there's been an awful lot of talk. The question of whether capital gains tax will go up has been ducked constantly throughout the campaign. We were promised early in the campaign and for a number of years that carried interest would cease to be taxed at capital gains tax rates. But that seems to have softened a little recently, and there is talk that where managers have invested their own money, they will be subject to capital gains tax rather than income tax. So that only means something if capital gains tax is going to be at a lower rate than income tax. So one hopes that means that capital gains tax will not dart upwards to income tax rates. You know, along with changes to inheritance tax, the other major change which has been promised is to follow up on the Tories' changes to the non-domicile regime. No real details. I think the expectation is that the changes will be a little more dramatic than were suggested in the spring budget, but that's one to wait and see. Whilst we've talked about possible tax changes, one of the things we are promised is a roadmap for business taxation and the retention of both the annual investment allowance and full expensing for capital expenditure, together with some clarity about what will qualify for those reliefs, and that if that comes to fruition, will be tremendously good news for business that can actually start planning properly for investment decisions. So I suppose what one has then is the balance of there's still a gap between spending promises and the raising of income. So how is that going to be filled? And we're told that will be filled by a clampdown on anti-avoidance, as has been the case over the last 15 or 20 years. Virtually every budget, we're told that there will be a clampdown. I think our concern with that is that avoidance is becoming a smaller and smaller part of what's known as the tax gap. It's a relatively small figure on the revenue zone numbers at around about 4% of the tax gap. And you feel that much more could be done attacking more illegal acts, evasion, non-payment, the hidden economy and so on, but also educating so that there are fewer mistakes made in tax returns and actually simplifying the tax legislation. Could we actually have a better take simply by having a simpler tax code? The Labour Party have promised that the OBR will have a full part to play in any form of fiscal event, which means that we cannot expect a fiscal event until certainly mid-September at the very earliest, probably October, possibly even November. And that inevitably leaves us a period of doubt, uncertainty and rumour while everybody's trying to come to grips with what is likely to happen.